Hello and welcome to today's West Coast Tax Seminar, E-invoicing series featuring Fonoa. During this session, we will be using Poll Everywhere to track participation for CPE credit. From your laptop or from your mobile device, navigate to pollev.com/Fonoa. Please enter your full name when prompted. Keep the Poll Everywhere window open. You'll need it throughout the training to answer polling questions. I've also provided the link in the chat. For your check-in, please be sure to complete all 3 fields and click Submit. Check-in will remain open until the first polling question. KPMG is approved by NASBA to deliver CPE-worthy training. In order to receive CPE credit, you must attend for the entire session, complete both check-in and check-out in Poll Everywhere, and participate in all polling questions. Please note, participation is tracked and failure to participate will result in a denial of CPE credits. Please be advised this session is being recorded. If you do not wish to be recorded, please disconnect now. I will now hand it over to Katya to begin today's program.
Welcome, everyone. It's great to be back to our electronic invoicing series webcast with a very trendy topic, the impact of digital compliance on online platforms. I will be your host for today's session, and if we have not crossed paths before, I'm Katya Painbert, KPMG Global Lead for Electronic Invoicing and Digital Reporting. Also with me is Lauren Tolman. She's KPMG Global Project Manager for Electronic Invoicing and Digital Reporting. For this session, we are featuring Fonoa, a leader in the provision of electronic invoicing services for the digital economy. And it's a pleasure to introduce Eiko, a tax technology director, and Trent, a senior tax technology manager, both from Fonoa. If we go to the next slide, in today's agenda will be comprised of 4 main topics. We will kick off with the general overview of the current landscape, where we will have a snapshot of where we are today regarding electronic invoicing and digital reporting rules around the world, as well as digital services rules. This will help us set the scene for the rest of the presentation, where we will talk about some key considerations for the digital economy, focusing on the challenges faced by U.S. multinational. Then Lauren and Eiko will be discussing a business case. They will walk us through a real scenario where they recently deployed together electronic invoicing solution, obviously featuring Fonoa in some jurisdictions that they just implemented electronic invoicing mandate. And we will finish today's session with some key takeaways and a glimpse of what's coming our way, some new developments. And of course, we will allocate some time for questions at the end of the presentation. So please feel free to include your questions in the chat. And with that being said, let's start. Perfect. Current landscape. So before we dive into today's exciting content, we would like to conduct just a quick poll. So for this specific one, please just select an answer. And we will wait just a moment for everyone to log their response.
I can see those answers are coming in, and it looks like most folks are answering B, limited awareness. The poll will remain open for another minute, but please feel free to continue on.
Perfect. Thank you. Let's dive in. So there are approximately 90 jurisdictions around the world that have already implemented some type of electronic invoicing or digital reporting requirement. And even when these requirements seem to have become, popular in the past few years, they are not new in the world of compliance. We can mention some examples, like in Portugal. Portugal implemented, the accounting SAFTI filed digital reporting, right, almost 14 years ago. In the Latin region, electronic invoicing has been broadly used since the early 2000s, so over 2 decades ago, right? So we have Trent here. right? So Trent, from Fonoa's perspective, you guys have experienced firsthand, the rapid progression and development of these requirements. What would you consider the main factor or factors that are triggering the expansion of digital requirements around the world?
Thanks, Katya. Yeah, I mean, the drivers that are forcing, or the governments are leveraging in order to introduce these requirements are differing depending on the main challenges. The main challenges, first being the VAT gap. So all the governments around the world that are struggling with VAT enforcement or corruption or tax evasion are looking at ways and explicitly using technology in order to try to curb or hinder tax evasion in their jurisdiction. However, not all governments around the world are burdened by tax evasion and are also looking at other or have other drivers such as simplification that they would like to simplify the process by introducing some form of digital reporting requirement. And an additional or a final driver might be the value of data. Obviously, governments that have more visibility of the businesses operating in their particular economy will make better policy and better decisions overall in order to boost the economy and make them as competitive as possible.
Yeah, thank you, Trent. Um, One thing to consider also is that we usually refer as electronic invoicing, as a very general term. But we need to just clarify, right, that electronic invoicing is not only limited to the actual billing document in an electronic structure format. So there are several countries that have expanded these requirements to other documents, correct?
That's right. So some countries have introduced mandatory electronic ordering, as well as transportation documents and other documents that are used in the billing process. And this depends on, obviously, the type of industry that the businesses are operating in. If you're services, obviously transportation documents aren't relevant for you. But statuses of payment and payment information might also be required to be reported to the government. So the government aren't stopping with the invoice, the actual tax document. They're looking at other documents to help them build a case against those that might be fraudulent in their economy.
Yeah, that's correct. So we're seeing in more mature jurisdictions, right? Like, for example, some Latin countries like Mexico or Colombia, they're already implementing like electronic payroll. So it's just like they're expanding in the overall requirements, and now HR needs to be part of the equation. Um, but I know we will be covering the different models of digital reporting later in the presentation, but I just want to touch bases very quickly on a topic that has been making a lot of noise lately. Would you mind providing from your perspective, sorry, some key points or considerations on the impact of these requirements in relation to fiscalization?
Absolutely. So obviously, physicalization is one thing that's really starting to impact, particularly the digital economy, because physicalization is not only limited to those businesses that are operating in face-to-face or retail type sales, but also is being expanded to those selling services or even goods in online. So that is one of the main impacts, I think, going forward. So making sure that you are aware of which requirements are actually specifically impacting you or in the business you're operating in.
Yeah, that's a good point. And from our perspective, we're also seeing, that there are specific requirements for fiscalization, right? But then in certain jurisdictions where also an electronic invoicing mandate has been implemented, So there are certain rules that will need to be, considered, right? So you will have the rules for fiscalization and also the rules for electronic invoicing, and obviously from a system perspective, there is also some types of synergies and potential interfaces. And I see Echo that is nodding yes. Do you have any comments on that?
No, my only comment there would be, Katya, I wish that they were all the same to make things a little bit easier for us. But as we will see later on, that unfortunately for us and many of the taxpayers, that governments have decided to go down different paths. And we look forward to more consolidation in this space, but we haven't seen it yet.
Yeah, totally agree. So we see a lot of jurisdictions in this specific slide, a lot of developments worldwide in the world of digital, requirements. So can any of you just summarize some key elements that the audience should be aware of?
Yeah, absolutely. So just turn my camera on, sorry. Yeah, so you need to be aware, obviously, as I previously mentioned, which obligations you must fulfill. And also, if you are, let's say, a platform type provider, that you might be actually liable for the compliance of your underlying suppliers. So these are the two main, I would say, things one must consider as a sort of digital, or a main thing that one must consider when starting to look at these requirements.
Perfect. Thank you, Trent. Can we go to the next slide, please? Thank you. So now that we have taken a quick glimpse, right, of the current landscape, the main question is why this is important, right? So what is the impact of all these requirements to the digital trade economy? First of all, the digital economy is one of the fastest growing economies around the world. And it's needless to say that the pandemic that we just experienced worldwide accelerated the increase of digitalization. And interestingly enough, financial inclusion as well. So there is an analysis published by the OECD that indicates that prior to the pandemic, there were countries like Brazil, for example, where approximately 40% of the population that qualified for the emergency aid did not have a bank account, right? So that's impressive. So now that I have mentioned Brazil, the actual growth of digital trade in the Latin region has been impressive. Back in 2020, just to put things in perspective, 45% of the population was somewhat engaged in digital trade, right? So fast forward to 2022, this year is expected that the percentage will grow to around 63%, adding approximately 84 million of new digital consumers in the region. So we also need to consider the complexities and the challenges that come with the expansion of the digital economy, right? And the implementation of digital compliance requirements. So one important thing to consider is that in the provision of digital services, there are several stakeholders, right, that might be involved. These will depend on the type of services, the operational structure. Some of these stakeholders could be, the purchaser, the vendor, online like marketplaces, digital platforms, transporters, as Trent just mentioned, if you're in the marketplace, supply of services, and financial payment intermediaries as well. And each of these stakeholders might be liable for different requirements, right? So in today's world where the supply of goods and services do not precisely require the supplier to have a physical presence in the jurisdictions where the supplies are provided, tax authorities are revamping and rethinking, the registration requirements. So this could be in the form of simplified registration, right? Or the application of thresholds based on revenue. this could potentially trigger a new series of questions, right? And I think one of the most relevant is, if I do not have a physical presence in a given jurisdiction where I am making, supplies of digital services, do I need to register, right? So that would be question number one. If the answer is yes, then am I required to comply with electronic invoicing rules and requirements? Or am I required to issue just a VAT compliance invoice, right? Lauren, I think you have a comment on that.
I do, yeah, because Kate, you mentioned VAT compliant invoices, so just want to chime in real quick here. There can be an expectation that the invoice mandate aligns with the VAT requirements. And by that, I mean the specific fields required to be included on invoices. However, that is not always the case. For example, in Serbia, there is a known mismatch. An e-invoice is required to contain codes for the goods or services supplied, as well as the total invoice amount, whereas the VAT legislation doesn't specifically contain those requirements. In fact, the VAT legislation requires the VAT rate and the amount of VAT to be included on the invoice. But those requirements, in turn, are not mandated in the invoicing legislation. So in this specific case, taxpayers need to make sure that they're meeting the requirements in both sets of legislation.
That's right. Go ahead, sorry.
Oh, sorry. No, you go for it, Katya.
Okay, so the impact of not meeting, both requirements, right, is the risk that an invoice issue will not be considered valid for recovering input VAT, right? So which can have a significant impact on cash flow, customer relations, and so forth. So continuing with just the highlight of key considerations. So other thing to take under consideration here is marketplace becoming, more strict in certain jurisdictions. So Aiko, do you want just to provide some general considerations on how marketplaces are being impacted by electronic invoicing worldwide?
Yeah, certainly there's been an evolution in the space over the last half decade to push more requirements upon the marketplaces to take responsibility for traditionally what has been a third party, an unrelated third party, particularly what the OECD calls the platform sellers. Essentially, this is posing additional challenges because, well, think of it this way, all of a sudden, platforms and marketplaces are being made responsible or encouraged in some jurisdictions to support the compliance of third parties in reporting their transactions, be it through specific types of rules, such as deemed reseller rules, or specifically by changing the structure of the flows themselves, and to help their underlying platform sellers report the transactions to the governments. So in these particular cases, it not only are online digital businesses impacted, but as you say, platforms specifically who interact with third parties and connect them with other third parties, essentially buyers and consumers. Yeah, they have a significant increase in the compliance burden.
Thank you, Aiko. And Trent, just quick question for you. So, can you just provide some key considerations or just general, thoughts on the difference in tax determination, right? So there are difference between, if you're performing B2B or B2C transactions, for example.
Yeah, so the tax determination, obviously the rates can be from the VAT side of things directly related to who your end receiver is. So in a B2B situation, particular rates might not be required, whereas in a B2C situation, they would be required. Also, depending on where you're trading, right? If this is a domestic transaction versus a cross-border transaction. So there's many considerations explicitly in this tax determination that one must consider.
Yeah, and one of the key challenges that we are seeing recently is related to data storage. So I just open the topic to any of you that want to provide, some comments around that topic.
I think this is one of the the bigger items in at least the invoice and reporting space that might fall between the gaps when looking at a solution. You know, data storage, how it is to be stored, where it's to be stored, how long it's to be stored, are all aspects that one must consider when actually building a data storage. So yeah, it's extremely vital that not only you report the transactions and conduct the invoicing in the way you should be doing, whether electronic or PDF or however you wish, but making sure that you're abiding by the data storage requirements, which might include having a localized data storage location on local soil in a particular jurisdiction, such as Turkey or in Saudi Arabia.
Correct. So, Eiko, any thoughts on data storage, and also from your perspective, what would you think be the most common challenges from an impact on the taxpayer systems?
Yeah, absolutely. And coming back, where do you store the data? Quite often, or at least what we're seeing, is legislation is being enacted not under tax rules, but personal data protection legislation or cybersecurity laws that may be enacted in certain governments that require data to be stored in the jurisdiction to which the transaction relates. So one particular challenge is, depending on the country in question, there are, of course, challenges finding the appropriate vendors to be able to store that data. That's one particular challenge, because not everybody's present there. We are used to storing nowadays, many of the customers that we work with are used to storing the data within the cloud. That's going to be a change within the systems that they have to operate. And keeping it at a high level, those are really the two challenges. How do you comply not with the tax, the reporting legislation, but certainly the other rules that are maybe present within that country in order to store the data locally?
Exactly. And from an overall systems impact, I think that, and we're going to be covering a little bit more on the real case scenario that you will be discussing with Lauren. But from a system impact, I think item number 9 and 10 here are correlated, right? So it's very important, for not only from the IT perspective of a given company or the engineering team, but also the tax team, to start performing some type of cross-functional collaboration and tracking all these regulatory developments, right? That at the end of the day will impact compliance. I think the way that we're experiencing compliance right now is completely different to what it was 20 years ago, because we have a requirement that includes technology embedded to it. So tracking these regulatory, requirements is very important. And you will need to fit them into your roadmap, not only from a compliance perspective, but from an overall systems perspective, regardless if you have an ERP, billing systems, even account payable systems, etc. Do you agree, Eiko? You're on mute.
Absolutely. So you may be storing your information within different systems. What we're seeing more and more is that historically the ERP was relied upon for essentially for the reporting and the storage of transactions, whereas now within that system architecture, again, which we'll speak on a little bit later, one of the things that we saw, what we're noticing is that a lot of the data that you need for reporting is being stored in upstream systems, particularly proprietary systems designed for the purposes of platforms to be able to operate their business.
Correct. Okay, so I think now it's time for polling question number 2. So if we can move to the next slide. Okay. So approximately how many international jurisdictions does your company currently operate in? And please select one answer, and we will wait just a moment for everyone to reply.
Yes, it looks like those answers are coming in really quickly, and most are weighing in with A. This poll will be open for another minute or so. Feel free to get those answers in. In the meantime, Katya, please feel free to continue.
Okay, perfect. So if we move to the next slide. So now we're going to start covering the main challenges for US companies. So if we move to the next slide, please. Perfect. So these are just some general considerations, right? As we previously mentioned, electronic invoicing and digital reporting requirements have been in place in several jurisdictions for a long time. However, one of the main challenges faced by taxpayers is the lack of standardization, right? Even in mature jurisdictions like the Latin American region, where the electronic invoicing has been in place, as just mentioned, for almost 20 years, each country has its own model and requirements in place, not only for invoicing, but they have also evolved, into electronic accounting and just the overall submission of how taxpayers, submit and report their tax returns. Now that the tax authority has a lot of visibility from end to end of the transactional flow, right? There are several jurisdictions, not only in Latin America, but around the world, where the tax authorities are providing, profiled tax returns. And by the way, not only for VAT, but also for other taxes like income taxes, right? So as this slide shows, so Eiko, Lauren, any comments on these key considerations?
Yeah, if we take a look at and consider the ownership and support, one of the key questions we get very, very frequently is who owns this? And unfortunately, there's no one single answer. And that's because this is all about cross-functional collaboration. But of course, there are a couple key players that can be highlighted. And this includes your tax and finance teams, given that these are tax requirements, but you also need to consider IT. So they're going to be the key player when it comes to this implementation, as well as HR. As Katya mentioned earlier, we're seeing electronic payroll requirements. So you need to have collaboration from HR on that point. And then also you need to take into consideration your customer relations. So do you have all the data that you need from your customers? How are customers going to receive these invoices? How is that process going to change? And then importantly, your leadership support. So is leadership aware of the upcoming changes? Do they understand the need for action? Have they considered the budgetary impact that this will have? So those are a couple of the key things to think about when we look at ownership and support. And then we have tracking developments, which this is a key challenge that companies face in just the breadth of the updates that are coming through, the challenge of just trying to figure out how to track them, understanding the impact to your company. What's the timeline? Is it going to require a very swift invoicing implementation? When and how will your company take action? So those are the couple of key pieces there. And then I know we also want to talk about the systems architecture. Eiko, do you want to chime in on that?
Yeah, of course. And then I think what I'll try and echo something that you mentioned earlier about the differences between the tax rules and digital reporting legislation as well. As you mentioned that systems are often designed to comply with tax rules. So you mentioned the content of a particular invoice. However, because digital reporting rules are also sometimes enacted under a different piece of legislation, they don't always necessarily line up to what is required from a systems perspective as well. So what do I mean by that? Well, there is an example where there are some countries that they have a difference between the time of when you're supposed to report a transaction under real-time information reporting rules and the time that you're supposed to generate an invoice which relates to that particular transaction. So for example, tax legislation would tell your systems that, hey, you have 15 days to generate this particular transaction. Real-time reporting rules would essentially come back and say that, no, actually you got 48 hours to report the transaction, but you can generate the invoice later, which means that quite often what we find is that the systems have been designed to comply with tax legislation to make sure that the tax points are respected. However, as soon as you start integrating with governments and reporting those transactions, you might see that there are a little bit of differences there. The second point is that, and the other 2 points I'd call out again are what you've already mentioned. One, where is the data actually stored? Is it in the ERP itself, or do you need some additional information about the transaction, which is housed in your upstream proprietary systems? So that's the second point, and something that Katya mentioned earlier, particularly to do with localization and storage. As we know, there are some countries out there which require reported data to be stored on their home soil. And in some cases, this is still open to interpretation to only be accessed from their home soil.
Yeah, that's correct. So I just want to highlight one key consideration, right? So we have here master data and processes. So that goes in line with what Eiko just mentioned. So we're seeing that one of the biggest challenges, right, that taxpayers have is data governance, right? So do you have the data that is required by the electronic invoicing mandate and the corresponding functional specifications? Do you have the data from a tax perspective that might need it for VAT compliant invoices that sometimes overlaps, but as Lauren mentioned, other times it doesn't, right? If you have the data, is the data stored in the structure that the tax authority requires, right? We're seeing just a perfect example that is very common and is coming up more and more. And Eiko, you probably can talk a little bit more about this, is tax ID validations, right? So if you are, transacting in real time, and you have a typo in your tax ID, an extra space, a dash, or simply the tax ID for your customers is not in the right format, all those invoices will potentially be rejected, right? And then you will need to figure it out, the cancellation process, issuance of credit note with reference to your original billing document, et cetera, right? So what we're seeing more and more validation checkpoints prior to the actual issuance or submission of those electronic documents. Eiko, do you agree?
Yeah, absolutely. And you can see differences within the landscape of digital platforms of how they do this. There are some companies that essentially do this early on during onboarding. Others periodically conduct their tests on a cadenced basis, typically monthly or quarterly. But the good practice is to try and do it as early as possible. As you mentioned, what happens when you try and report transactions with incomplete, inaccurate, or flawed data, essentially, is in the good cases, it will be rejected by the governments. In the slightly more cumbersome, it might be accepted. And what your tax team will be dealing afterwards is with questions as to what is this? How did you report this particular transaction? So the essential cost here is the time spent of resolving these particular issues. And then also coming back to what Lauren was saying, that this is a cross-functional collaboration about getting more stakeholders involved. What do you do once you have identified that the information you have been provided is inaccurate? You need your customer support teams to potentially reach out to those vendors or to those customers to ensure that they can gather the correct information for future reporting.
Yeah, correct. And I think Lauren will probably be touching on this point later, but just one more thing in relation to data. When you have several systems interfacing, let's say you have an ERP, you have a tax engine in place, maybe a billing system as well, the more systems you interface with your centralized system, if you have one, there could be hiccups in the data, right? So this could potentially impact your electronic documents. Some of the biggest challenges that we have seen are around rounding rules, right? Specifically for countries that have different rounding rules, like Colombia, right? In one invoice, you can have 2-3 different rounding rules, depending if you're referring to the amounts in the invoice or the percentage, etc. So you need to make sure that when you implement or deploy a solution, you don't only focus on the what we call the data mapping file, right? So what are the mapping elements that I will need to consider with my system so I can send it to my electronic invoicing provider? You need to make sure that you understand your tax footprint, right? And the requirements from a legal perspective that need to be a one-on-one match with your data mapping document. So that being said, we can, I think, move to the next slide. Perfect. So this slide is just a snapshot of the general, models that we're seeing around the world, right? And I'm not sure if Trent is still on or Eiko, if he's not on. You can cover it.
I'm here, I think, hopefully.
Okay, perfect. Yeah, you're there. Go ahead.
Yeah, so what we've done here is sort of categorized each of the different types of digital reporting requirements into these 4 categories. Sometimes they are attacking different transactions within the economy, for example, a B2C transaction versus a B2B. But also one must consider that multiple of these DIRs might be in effect in a given country. Take, for example, physicalization. So this is simply that whenever a sale is made, generally on a point of sales device, but not always on a point of sales device, the transaction or elements of that sale must be reported to the tax authority in real time. And generally some return communication from the tax authority must be present on the proof of payment, the receipt, or in fact the invoice. E-invoicing, on the other hand, is a little bit more intrusive, as it generally includes B2B transactions. There are 2 flavors. So one more famously introduced in the Latin American region, which is the lower flow chart you see there, where the tax authority acts as a clearing agent, where they clear invoices and approve them, and then the supplier, as a second step, must be able to pass these on or direct them to the target receiver, whether that being a known customer, as in like a business, or in fact a B2C customer. E-invoicing with a centralized platform, as you see at the top here, is when the tax authority actually directs the invoice after it's cleared to the target recipient. Italy is an example of this with the SDI functionality. So there are 2 flavors on the e-invoicing piece. Real-time reporting is something different again, where particular elements of the invoice must be reported to the tax authority, usually after the invoice has actually been generated and also passed on to the buyer. So there's no requirement for the invoice to be, let's say, approved by the government before the buyer is able to receive it or pay it. SAFT, on the other hand, is again another type of requirement that generally involves aggregated data, generally over a month or a quarter or even a year. And these generally are reported or produced together with a VAT return. So there are many different ways or digital reporting requirements that can be introduced by governments. And one thing to note here is just because 2 countries' requirements are, let's say, follow or in the same category, this does not mean you can leverage, in general, the same system to be compliant in both jurisdictions. This is particularly evident within the Latin American market, where most of them fall within the e-invoicing clearance model. However, what you need to do, or what you're obligated to do, is very different. Everything from the format to how you sign the document, as well as how you register your business or how you interact with the government entity, is extremely different. So these are the 4 main categories, but yeah, there is extremely many country-specific nuances within each of these model categories.
Yeah, and there could be also the case, now that you mentioned the Latin region again, that even when these are different models, there could be the case that a country might have like a hybrid model, or you can have more than 2 models in the same country, right? So if you're a retailer, for example, then you will have potentially fiscalization, electronic invoicing, and electronic accounting if you're located in Mexico as well. So that's just something to consider, because then it adds to the complexity, right? And to the overall operational structure. Eiko, any comments?
Yeah. I only have one comment that from the practical implication, I guess, for the audience here today, is that depending on the complexity of your business and your business models, that if you have a relatively straightforward business and you only do one type of activity, one line of business, that makes things easier. As soon as you start to cross those boundaries, B2B, B2C, different LOBs, different types of goods, services being provided within the same jurisdiction, then you're hitting many more of these types of requirements within one country, which again mounts the additional complexity upon the systems and the architecture they need to design in order to be compliant.
Yeah. Yeah, that's a very good statement. And also, I'm just thinking about, when we talk about payment intermediaries, for example, so they might be liable to some extent to these requirements, but there are jurisdictions where actually, as a payment intermediary, you might have extra requirements that you will need to fulfill, right? So we know, again, we keep mentioning Mexico, but in Mexico, depending on your operational structure, you will need another layer of certification. And if you're retaining, money or you're interacting obviously with financial institutions, that certification is very strict. It could take over 2 years, right? So that's just something to consider as well. So I think now it's time for polling question number 3. Perfect. What do you believe will be the top 3 challenges your company will have to overcome in the adoption of digital reporting requirements? So again, we will just wait a moment for everyone to reply.
Yes, and as a reminder, you can find that poll at pollev.com/Fonoa. I see those answers are coming in, and they're really all across the board. So the poll will be open for another minute or so. I'll post the link in the chat here as well, but you can continue on with the next piece of content.
Thank you. Thank you so much. So, okay, these would be you, Eiko and Lauren. You guys have collaborated, in several deployments. So you guys are going to be providing the audience with a real case scenario and some key considerations. So the mic is all yours.
Thanks, Katia. So when we take a look at the case study, the first thing I want to do is touch on a couple of the phases that are applicable to it. So when we approached this, the first phase was the assessment. And that's where you're developing a detailed understanding of the current state. The types of questions that need to be answered are, what's the structure of the company? What applications are used? What is the flow of data? Where and what are the existing challenges, etc. Now, the assessment itself does not need to be global. It can be done for a few jurisdictions, say 2 to 3, and these should be identified based on the different regions, the risk of exposure, new requirements, and any other criteria. So this will act as your general diagnostic of the current state. And then from there, the next phase are your requirements. So this is where we really dig into those country-specific details. It's when the technical analysis is performed and the technical schemas are gathered. So these outline the components of e-invoicing and digital reporting, and it's indicating the fields that would be considered mandatory or optional for your country's footprint. And it's during this time that we're also going to document the layout for the e-documents or the digital forms for any given jurisdiction. And it's extremely helpful because this is going to facilitate the identification of the specific requirements and considerations for the design phase, such as the need to hard code data. If you're only having one entity that's transacting with a single VAT registration, maybe that's a piece that you would like to hard code. Also in this phase, you're going to identify the scenarios and document those. And so it's key to identify these scenarios because it's going to link to the document types that are going to be in scope and ensure that each is mapped out based on the specific tax authority mandates. For example, you need to know if you have to have the ability to not only issue the e-invoice, but cancel that e-invoice, to validate, to accept, reject. What are all the different statuses that it can have, and how is that going to impact your system? And then we move on to the design phase. So this is where our collaboration and effort really comes into play. The technology and IT team need to identify the data sources and the systems and scope. Master data is identified and validated. You have your data mapping files and interfaces are also identified. And a functional specification document is created, which maps the requirements to the new processes and flows. Now, once all that's complete, then it's time for the implementation. So this is where you start the building of that framework for the mapping for the scenarios that are in scope. It's also when the testing plan is implemented, and you want to make sure that you're allocating enough time so that if there's any gaps, you have enough capacity to resolve those. And then once everything is in place, then we can move on to the final phase of deployment. So during this phase, that's when you have the cutover plan is going to be designed and implemented, and then you finally go live. So AKO, I know I gave a high-level overview of all those different phases. Do you want to touch on the specific role that Fonoa played within those phases for our joint implementations?
Sure. Maybe just if I use the same terminology that you gave them, that assessment requirements, design, implementation, and deployment, that just to explain the first phase that you mentioned, the assessment, this is typically something that happens with your team with KPMG. And again, this is where you look at like you said, you look at the business models. We are not involved within that space as heavily. We maybe reached out upon to understand what is our understanding of a given market. How do the things currently work there based on our experience? A little bit more challenging when it's a brand new market, especially in those cases where not just us, but even the legislator and the governments don't necessarily know exactly what they want and how to answer the questions that are very specific to a particular customer or a particular business model. So this is where it's really critical to understand whether or not you're caught by these rules. And just some examples: what determines a B2B or a B2C transaction? As Trent's mentioned, you might have different rules that come in for B2B and B2C transactions. Understanding what classifies under what heading is pretty crucial. And it's always quite a straightforward question. It's not always as clear as one would like. So that's usually something that's handled with a reliable advisor, both yourself and somebody that's local to the market. When it comes to the drafting the requirements, we're usually answering questions at this point. It's something that when you're trying to pick out the vendors to try and support with the implementation, this is usually when Fonoa starts to join the discussions and saying whether we can or cannot support a particular endeavor and what we would be doing and what timelines would be needed. In the design, we are quite heavily involved in this part with the clients, of course, looking at the particular systems. And again, this really varies on the type of hats that we wear throughout the processes. But in the cases that we work with together, we have solution design specialists that are working with our client teams to understand where their data comes from, how it can be transformed, mapped, and pushed into the government system in a reliable way. And with the implementation stage and kind of sitting in between, if we're lucky and the governments have allowed for a testing environment where we can start to push transactions and trying to front load any of the errors that we see, yes, that's exactly a stage where we try and push as much through to the authorities to understand, we can plan for the happy path, but what happens when things don't go the way that they are meant to? And that's really when we kick in. And then, of course, the deployment is a lot of monitoring and hand-holding through that stage to look at the transactions, make sure that the volumes that we are dealing with, the transactions that are being reported, are going through successfully. And if not, that, of course, we make sure that they're resolved as quickly as possible.
Mm-hmm. Yeah, thanks, Eiko. Yeah, I think one of the pieces, and you mentioned it, and we've touched on it earlier too, is the fact that for some of these implementations, they're new for everyone. So when you have a country like that, where this is the first time that country is deploying e-invoicing, what we've seen in our experience is that there can be gaps in legislation, or maybe the legislation was clear, but when you're enacting it in practice, it's not entirely clear from that perspective. So there are, a lot of communications with the tax authority, with everyone trying to make sure that they understand not only the rules and regulations, but identifying, where are those gaps. For example, sometimes the testing platforms are not as robust as we would like them to be, or sometimes the tax authority portal can be unstable. And so there's all sorts of challenges from that point. And then you also get into the country unique features. So I think for one of our implementations, which was a fun one, where it was the implementation of e-invoicing with the requirement of a piece of hardware to be installed. And so I think the Fonoa team did a great job of transforming and being able to meet that requirement. But that was a very interesting one, and Aiko, you've mentioned it before, especially in that particular implementation. It wasn't just that there's now a hardware component. You had touched on the fact that now we're getting into the space of security as well, and the concerns with that.
Yeah, I mean, it's not that we don't have enough things to do at this stage, but now as soon as you start to implement hardware locally, that you have to not deal with only your digital security requirements, but also the physical ones. Needless to say, I'm not a fan of hardware pieces to be attached within this process, but sometimes, as you point out, it's unavoidable. There are other things that, I mean, what makes this a little bit easier is the learnings that we go through every single implementation. As you saw from that slide, starting in 2015, I think it was, the number of implementations have grown over the years, and with every one comes new learnings. For example, when we start spotting things such as with one of the earlier implementations that we did, special characters. What does the government accept? Will it accept Latin shrift? Will it accept Arabic? Will it accept emojis? So quite often the answer to the latter one is no. So you have to be able to, although you can print them on an invoice, you can't report them to the tax authorities. They have to be stripped out. So those are the kind of fun things that we discover. And another one I remember was the invoice number length. So for one reason or another, some invoice numbers are curtailed in the length if you get to size your invoicing sequences, but you might be restricted to a set number of characters, which is not necessarily how your systems have been designed. So figuring those things out nice and early, even when they're not documented in the legislation, it's always good to test as early as possible.
Yes, absolutely. It's, a fun practice to just put everything all together, send it through a test transaction, and see what the tax authority responds with. And with all these requirements, we also have to consider the invoicing solution itself. And so we are seeing regulations around that solution. And in one of the implementations, there were very strict requirements around the Fonoa solution, or, in that scenario, for any invoicing provider, but in this case, Fonoa had to comply. And it had to do with, who could log into the solution. Was there an actual log documenting who had done that? Are there locks in place preventing people from making different changes? So then Fonoa has to be able to adapt those requirements as well when we go into these new jurisdictions. Yeah. I think, though, overall it's been fantastic learning experience, but like you said, it can be new for everyone, but then we're able to take that knowledge that is gained and apply it to any of the future implementations and really relate it and pull through, maybe similar solutions or adaptations that had been applied. And, I think one thing that has led to the success in our collaboration here has been our open communication. And so from the get-go, we started meeting cadences between our two teams to really talk through, who's owning what has the client shared with us, to really share that information, and then ensuring, we are also communicating with the client as a united front, ensuring that, we're doing everything possible that we can to make sure it's a successful solution, and that we're not missing anything because some people were left out of other conversations. So I think that communication is very key, and has resulted in a couple successful implementations here. So with that, why don't we kind of do a 180 and flip gears, and let's talk about what happens when a company gets it wrong. Katya, do you want to kick us off for this one?
Yeah, sure. So thank you, by the way, for all the insights. So we know that digital reporting requirements are being implemented in several jurisdictions, and obviously the compliance processes have been impacted by the introduction of digitalization. But what happens when taxpayers do not comply, right? So first of all, we need to understand that tax authorities now have visibility of all transactional data pretty much. And in advanced jurisdictions, as I previously mentioned, they're leveraging all this information that has been reported by the taxpayers to provide them with pre-filled tax returns. So that being said, one important thing to consider is the impact in tax adaptability. So what does this mean? If you issue a non-compliant electronic document, right, doesn't need to be the actual billing document, could be a credit note, debit note, etc. This document cannot and should not be used to deduct taxes or even request refunds, right? So in addition to that, if you issue the non-compliant electronic document, potentially, your customer might reject it because they also will not be able to report that transaction to the tax authority, right? They shouldn't.
Yeah, thanks,
Lauren?
Katia. Yeah, so from that perspective, then the next piece to also take a look at are the penalties. So we're seeing a lot of countries are implementing the penalties on both a per invoice and a per case basis. For example, Mexico, penalties are imposed on a per case basis, which can be as much as 5,000 USD. And this includes penalties for issuing incorrect invoices, simply not issuing the invoice, or the invoice is not matching the accounting records, and so on. And it's not just the penalty that comes into play here, because as you start racking those up, this can lead to an increased risk of audit. And additionally, specific in Mexico, if the non-compliance becomes severe, the tax authority can actually remove the business's digital stamp for 2 weeks, which is essentially means they're shutting down your business for 2 weeks. So it can be quite drastic. When we look at penalties in other regions, for example, Italy, we can see, again, steep penalties. So they issue penalties on a per invoice basis, and those penalties can range from 250 to 2,000 euros per invoice. And that's, per invoice not issued or for any sort of errors. Another region that has an interesting penalty regime would be Saudi Arabia, and they have a tiered approach for the various violations that are identified during, they call it a field visit. So this is what we would think of as an on-site inspection. And so what the tax authority does in Saudi Arabia is they start off with an initial warning. But if those violations continue to occur over the course of a 12-month period, penalties are assessed on a per occurrence basis. So the penalties start from 1,000 Saudi riyals all the way up to 40,000 Saudi riyals. And that equates to about 260 to 10,600 USD, meaning each time a violation reoccurs and is identified by the tax authority, you're going to see those penalties increasing on that scaled basis. So the tax authorities are serious about imposing compliance, and they're, using a lot of different methods to do so. But one thing we're seeing frequently are these rather strong penalty regimes. And it's not just this, but we're also seeing that companies are going to open themselves up to litigation in some countries. For example, in Egypt, there can also be criminal penalties. So it's something to take into consideration when you're analyzing these regions and trying to sort out what is the risk if we take no action or if we're delayed, to really consider what are the penalty ramifications there.
Yeah, and Eiko, just a quick question. What is the greatest impact that you have seen when clients get it wrong?
So in my experience, the biggest one didn't necessarily actually come from the governments. It was the problem was mainly centered around the clients. As you mentioned out on the tax adaptability point, if you are a high volume business generating transactions in a B2B scenario, which are captured by real-time reporting rules or digital reporting rules, such as e-invoicing, as you mentioned, trying to explain to your revenue teams who fought hard for a deal why they can no longer sell to a particular customer because they refuse to work with you, that's perhaps the hardest discussion to have, because that's not something that a pain point that a tax team owns to say that we can talk to the tax authorities, try and figure that out. This is now from a revenue standpoint for your business, the fact that you're starting to gain a reputation and lose clients in a particular market, that's probably the hardest one that I've seen so far.
Yeah, and just one quick comment on this, and it's not specifically or intrinsically related to the transmission of a non-compliant electronic document. We're seeing also a trend or a tendency from tax authorities to shift the actual, validation of compliant taxpayers with the introduction of what we colloquially, say with blacklist, right? So there are countries where tax authorities actually publish, right, a listing of non-compliant taxpayers. So they shift the responsibility of the tax authority tracking, transactions with these taxpayers to the actual taxpayers. So if you have, for example, a vendor and sometimes customer as well that is part of that list, right? You can potentially put yourself in the risk of an audit or some fees or penalties that might be imposed by the tax authorities as well.
Katja, I have a comment on that. Just a
Yes.
very quick one. It's what I found fascinating is that the taxpayers are not the only ones monitoring those risks. So what we're observing is that if you're a global business that all of a sudden finds itself on the naughty list of one tax jurisdiction, other tax authorities are also paying attention to those lists. So if you're operating in a region within more than one country with these types of rules, and all of a sudden you're flagged on one list, that usually signals to other tax authorities to open up, or let's put it this way, pay more special attention to you within another country. So it's quite important to keep yourself off those lists.
Yeah, exactly. And just, to be clear, the liability applies for the company as a whole, right? And the responsibility as well. And just going back to your comment, with tax authorities exchanging all information, so that could potentially impact a company, in other jurisdictions as well. So, okay.
Katya,
Yeah, go ahead.
mentioned that bringing that back to the whole company, like, when those penalties are applied, it's on the company itself, but you're also seeing them applied to the tax representatives as well. So for example, in survey, you have penalties and the scheme is based on one, they're going to assess penalties towards that specific company, and two, your company representatives could be personally liable as well. So there's multiple parties that are involved in that as well. So it's not just specific to the tax, like you said, it's the whole companies are going to be impacted.
Exactly. Trent, do you have any additional comments on penalties?
Yes, so the penalties again differ. So for example, if there is a country that has multiple requirements, say for example, they have a data storage requirement, the penalties can be significantly different from being non-compliant with digital reporting or the fiscalization piece. So being also aware of what the risks are, but also what the financial challenges will be if you get it wrong. So making sure not only you get it right for one, but get it right for all. And I think this is one of the biggest challenges for businesses. As we talked about with the business case, looking after the requirements, but also being able to maintain the requirements, because just getting it right from day one, that's great. Getting it wrong in day 5, that's when you will also occur these penalties. So it's an ongoing process that businesses must be aware and must be conducting.
Exactly. Yep. So I think now it's time for polling question number 4. You have a global VAT or GST control framework to manage key task risks and developments across your global business in a consistent fashion. So we will wait just a moment for everyone to reply.
And I can see that those answers are starting to come in, and they are spread across the board as well. This poll will be open for about another minute and a half. In the meantime, Katya, you are free to move on with the content.
Perfect. Thank you. So let's move to the next slide. Okay. So we have covered, several topics now. We know there are challenges. We know there are different models, but what's coming our way? Trent, do you want to provide a quick overview?
Yes.
Thank you.
Absolutely. So as you can see here, there are requirements already set in place all the way up to 2026. There's a significant increase in the 2022. This is generally because a lot of the requirements were postponed due to the pandemic. What you will also see on this is some countries appear several times, and this is because they either have multiple requirements or they have a phased-in approach, meaning that the requirement is only directed or obligating a particular subset of the businesses, and later the scope widens to include more businesses. They also might be targeting a particular type of good. As you can see in Romania, high-risk goods required to be transacted electronically, whereas non-high-risk goods will be in scope from 2023 next year. So there is this phasing in approach. There are many markets here that are quite large. As you can see, you've got already from 2024, some of the biggest economies in Europe being Spain, Poland, France, and even Belgium, all implementing B2B electronic invoicing. So Spain, France to some extent, being B2G, have already got requirements in place. But as I said previously, just because you fulfill the requirements today, that doesn't mean you should, pack your bag or leave the campsite, so to say. You need to be able to maintain and continuously monitor ongoing or upcoming requirements that may actually change. So yes, there's many requirements being implemented, and there is no jurisdiction in which these are being focused in. Rather, it's actually expanding. So more countries in Southeast Asia are jumping on the bandwagon, as well as those in Africa, such as Egypt being one of those that at the forefront of requirements. And of course, in the GCC nations, with Saudi Arabia leading the charge, starting from 2023 with the second integration phase of their e-invoicing requirement. So there's no time to rest, so to say, for businesses. So it'll be a challenging a few years ahead. But as we've already seen on the one of the previous slides, there's already over 90 countries impacted by digital reporting requirements, and something around the area of about 60% of the total GDP of the world is impacted by digital reporting requirements. So this will only increase. And as we've already talked about, the governments are already looking what other governments have introduced and are putting together their own digitalization or digital reporting regime in order to tackle the challenges that they want to, or challenges they want to achieve, or goals they want to achieve. Sorry. Thank you, Katja.
Thank you, Trent. So just looking at this calendar, and this is just a snapshot, right? So we anticipate, as we previously mentioned, that jurisdictions that have already implementing a mandate, they will continue to evolve. So we can anticipate more developments. And just to put things in perspective, last year we published. We started the publication of these global developments, right? And I think, Lauren, if I recall correctly, we track over 300 developments worldwide, right? So
yep.
that, yeah. Do you wanna talk a little bit about the increase on those developments from when we started January last year to now?
Mm-hmm, absolutely. So we've tracked over, like Katja said, over the 300, but we were very conscious in how we were publishing those. So we had published about 150 of those. And now, as of today in September, I mean, the number of developments has exponentially increased. And we're having a fun time reviewing all of those developments and, pulling out what is going to be the most impactful and ensuring that those are being shared with people. So, in order to track those, and I'd say the number of developments we had at that point, I think we probably had maybe over 300 within the first quarter of this year, Katja. It has gotten to that point with the continuous changes, and it's not only new countries being implemented but it's every time we have a wave that's implemented or a phase. And I know AKO certainly has some thoughts of when we get into these different waves and thresholds of the impacts that can have, but it's something to consider because the tax authorities are having several different approaches with these implementations. They can do it based on the transaction basis. So we've used some acronyms around here. So your B2B, your business to business, your B2C, business to consumer, your B2G, business to government, or your G2G, government to government. And so they can be implemented based on those transaction types, and then further on based on the amount of revenue a company has. And there's various different ways that they can break this out. So it's not just, as of the first of this date, everyone's going to be, subject to e-invoicing. It makes it even more imperative to track the developments because now you need to take a look at the revenue thresholds, which AKO, do you want to provide some comments on your thoughts there?
You've heard me talk about this before, clearly. So, of course, thresholds are intended to simplify compliance, but bear this in mind, particularly with platforms and marketplaces. They tend to they help in some ways, but they also cut a different way. They make things a little bit more complex. And consider it from this point of view, if there are thresholds in place, you have to monitor them. If you're a global business, and this doesn't just go for thresholds, go for everything, you're dealing probably in several different currencies, particularly if you're selling cross-border. Which currency is the threshold set? What exchange rates do you apply in order to make sure when you cross it, when you don't? These questions also have to be answered up front. So while I do, yes, I appreciate that the intention of thresholds is, of course, to try and simplify matters, and they do achieve that aim in some respects. But there is also the converse side that you have to consider the complexities that they also create for businesses, particularly platforms and marketplaces within a particular jurisdiction.
So I have a quick question followed by another quick question. So we're seeing all these developments, right? So we're seeing that this is not something that will be finalized or completed in the next year or two. This is like a journey for taxpayers and solution providers, and even for us, part of a big four. How can taxpayers prepare for, number one, what's coming their way, and number two, the unknown, right? So once the country implements an electronic invoicing, there will be further development. So what would be the best approach to prepare for all these, upcoming changes, especially if a taxpayer has a global tax footprint?
I think it's important that businesses actually have a strategy, and we talked about ownership before. So we need to make sure that taxpayers need to make sure that they have an owner or a department that is looking after this, to make sure that they do have a strategy that is like we discussed, continual. So monitoring, making sure you are following the regulatory changes, assess, making sure you actually look through these. Are these applicable to me? Evaluate how you do it, and obviously implementation of whether you build your own solution or leverage that of an outsourced party. And then obviously the maintenance, whether that being internal maintenance of the solution, but also this could be reevaluation or improving the actual solution itself, being more efficient, or have, let's say, some actual gains from the data in which you're having to report. And this is, again, a continuous loop going again and again for not only every implementation, but for every country, but for also every implementation.
One of the key questions that we get asked a lot is, well, I have already invested, in a great ERP solution. Can I just leverage my ERP, right? Or do I need a solution for external to the ERP to comply with electronic invoicing?
Yeah, so some ERPs do offer solutions for particular requirements, but one shouldn't simply rely on their ERP. In general, as we discussed before, sometimes the data elements lie in different processes that might be outside of the ERP system. So it's making sure that you have the right data, And if you have a solution that you can leverage in order to facilitate or be compliant in a given jurisdiction, obviously that's an opportunity, but it might not be the best choice. So it's one of those choices you need to make internally, and it should be a part of that that strategy that I talked about earlier.
And Trey,
Yeah.
you made an interesting comment about, finding the source for that data. And so just want to chime in here that, another consideration with this implementation is that data source. And what we've seen for companies where they maybe have multiple systems involved, this becomes a wider practice and a wider project to consider what is our current landscape and how can we comply with this going forward, because as they do an implementation for one country and it becomes very clear that they're pulling data from all these different sources and it's becoming a very difficult process. Well, you're going to have to go through that for all these other countries as well. So maybe taking into consideration consolidation of that data or the use of a data lake, and just really taking a step back to look at how is the company storing that data and what would be the best process going forward, knowing that this is all coming, so that you can actually have more successful implementations and less issues and less build time, just trying to simply get the data out of your multiple systems, which I know, Katya, you definitely have a lot of experience when it comes to the data lakes and those strategies for clients on what can a landscape look like, what would that ideal landscape look like as well.
Yeah, so that's another key question, right? So is there an ideal system architecture for electronic invoicing and digital reporting? And that depends on so many factors, right? From operational structure to the type of online platforms or the type of services that you're providing, your tax footprint, et cetera, et cetera. But one thing that I think we can all agree is, as Trent just mentioned, is important of having a strategy, not only for electronic invoicing, right, but for compliance overall. At some point, if you have a global tax footprint, you will need to make a decision if that strategy is going to be localized, a country by country approach, which from my perspective, I wouldn't recommend that, or it would be a regional strategy, right? So can you find a solution that, might fulfill the requirements of certain region that you need to comply with? Or would you rather, go towards, a solution that is more global, right, on functionality? But that being said, I think I want to be conscious of the time, so we'll probably need to move forward to the next slide. We're almost done. So key takeaways. Okay, for key takeaways, as we mentioned, requirements will continue to evolve, right? So mature jurisdiction will continue to include new versions of current electronic documents, or implement, new fiscalization requirements, more digital requirements, etc. So it's very important that companies implement a roadmap, right? And as we mentioned before, and Lauren emphasized that, we need to make sure that that functional roadmap is a result of cross-functional collaboration, right? Yes, IT engineering teams, they will own the systems landscape and potential configuration setups, etc. But also we need to make sure that tax has a seat on the table. At the end of the day, as we mentioned, it's just the compliance, right? That will be impacted. One important thing that we also would like to highlight is when we were doing the survey, the polling questions. So almost 70% of today's respondents shares that leadership has no awareness or limited awareness, right, of what's happening. So it's very important that that cross-functional collaboration, right, is expanded throughout the company. Leadership, your CTO, CFO, CEO, they need to have visibility to what's coming your way, because at the end of the day, this will be not only a systems impact, a compliance impact, it will be a budget impact. And as we know, without budget, it will be very difficult to move forward. And lastly, data controls are important. Governance in general is critical. And with that being said, I will just give you the opportunity, echo Lauren and Trent, to provide some final takeaways.
Shall I go first? My takeaway is, and please pity your tax technology and financial fintech teams and look into this early. It is often underestimated the amount of effort that this takes on them and prioritization for their roadmaps to have more visibility early on. So my one takeaway is, if you have to do things a little bit, do things earlier than you think you need to.
Perfect.
One more piece. So I think once you've established your strategy, make sure it's future-proof. If you are going to choose a third-party vendor to help you in particular countries, make sure that they are, let's say, a compliance provider. So they're not just looking to be compliant again from day one, but actually will roll with the blows, so to say, and make sure that you not only become compliant, but remain compliant for the entire, for the future. So make sure it's a bit more of a partnership, let's say, rather than a straight up customer relationship.
It's a great point, Trent. I'll just kind of layer onto that is ensuring that clear communication between all those parties so that you have the support to take action and move this forward. As we have all reiterated during this presentation today, the requirements will continue to evolve. So even when a country has implemented their e-invoicing model, the requirements are going to still be updated. So this is not static. It's not a implement it and step back, yay, you're done. It's very much going to continue to change, and it's the way of the future. So ensuring that clear communication and that path has been set up would be my last takeaway there, Katia.
Thank you, Lauren, Echo, and Trent. So as we close out, we would like to ask our last two polling questions and also invite the attendees to write any questions that you might have in the chat box. And also, if you're interested, in a specific topic, feel free to write it in the chat box as well. If we don't have time to address all the questions or the topics today, we can follow up and schedule a separate session. So who do you believe should be leading or being involved in the implementation of electronic invoicing and digital reporting requirements in your organization? And we will wait a little bit, allowing everyone to respond.
Yes, I will go ahead and say that those answers are starting to come in. It looks like a majority are responding with A. I'll also take this opportunity to say we do have another polling question, and I want to ask everyone to stay with us through the end of the presentation, as there is a checkout that you'll need to complete to guarantee those CPE credits as well. I did see a couple of notes in the chat for folks who had issues with Poll Everywhere. So if you did have any trouble logging on or answering any questions, I've put my email address in the chat, and you can feel free to reach out to me and let me know what those issues were, and we can make sure that everything is all cleared up for your CPE. And
Thank
with
you,
that,
Leanne.
Katia, I will hand it back over. Yes.
Yeah, I think we have one more polling question, right? Perfect. So I'll leave this last polling question here in the screen to allow the attendees to answer. And then there are a couple of questions that are popping up in the chat box. One of them is, can you elaborate on cross-border invoicing requirements? There are certain jurisdictions that indeed have implemented requirements around, international trade. I would say, from my perspective, one of the most mature jurisdictions regarding digital compliance overall would be Mexico. So you will need not only electronic invoicing, you will need to implement not only electronic invoicing, but also international trade and also electronic payroll, right? So there are several requirements. From a master data perspective, there is a huge impact because you also need to maintain, obviously, if you're transacting goods, right? You will need to maintain a specific codification for the products that you're importing or exporting. Now, if you're transacting services only, then there are different type of requirements, right? If let's say you're based in the US, you're dealing with B2C transactions, and your clients, your customers are in Mexico, you might be required, even if you are not physically in Mexico, to issue a withholding certificate for that type of cross-border transaction. So Eiko, I don't know, or Trent, I don't know if you have any comments on that.
Yeah, so I think this is a growing trend with tax authorities. They generally start off with their internal economy, so domestic transactions, but then later they also understand there is efficiencies to be gained by obtaining the data for those cross-border transactions. So you named Mexico, but countries such as Spain with the SII, you're required to report purchases, whether that being a domestic purchase or a cross-border purchase. Similarly, in Italy, you're actually required to report not only domestic transactions, but also domestic purchases as well as sales. So yes, this will, again, the cross-border requirements will only increase. So this will be another let's say, not category of real-time reporting, but another, let's say, type of transaction or segment of your business that you will have to also report.
Yeah, thank you. Another question. So what is your opinion about companies exploring efforts towards moving their electronic invoicing needs in-house, like taking care of their electronic invoicing needs themselves? From a KPMG perspective, that's an amazing initiative internally, right? However, I will find that very extremely difficult, right? Not only from a system landscape, operational structure, resources, maintenance of systems, etc. There are certain jurisdictions that if you have a high volume of data, right, you are required, you will need a certified provider. So even if you have the capabilities to do that, you won't be in a position in certain jurisdictions to actually, do it by yourself. Most tax authorities offer, manual uploads or manual creation, of electronic invoices. But as I said, if you have a high volume of transactions, that's not a feasible, approach. Eiko, do you have any insights on?
Yeah, absolutely. Like you said, I agree with everything you've said, Katja. Just to add that, be prepared for the cost of ownership when doing that. If you're operating in one jurisdiction, then that can make sense because you can monitor and maintain that one country. When it comes to operating and doing this globally, that cost, and for simple things, language barriers, connections, certifications, the cost of compliance and cost of ownership of maintaining that is significantly high, particularly when you compare it and you don't have to build these things. I mean, maybe several years ago, yes, that was indeed the case. But these days, you can essentially integrate with a provider in the market. So cost per transaction should be significantly lower than maintaining such solutions in-house.
Thank you, Eiko. And Liani, I think we're about to close out the session.
Yes, we have just about hit time, and you'll see I've posted the Poll Everywhere checkout information here. At this time, please navigate to your Poll Everywhere window and submit your checkout by completing all 3 fields and then clicking Submit. We want to thank everyone for joining us today and hope you found this session to be informative. Trent, Eiko, thank you for joining us. Katja, Lauren, wonderful job.
Thank you.
Thank you so much for having us.
Thank you, everyone.
Thank you.